Let's start with Meta. What was the headline for Meta for you?
Well, stock is up meaningfully today. You can see that, the average revenue per person continues to increase somewhere between 10 to 16% quarter over quarter. I think that's the exciting part. You see them investing pretty significantly within the world of AI. And there are some rumors that the underlying AI models that they're building around next generation llama are starting to perform pretty well. There is pretty significant CapEx here and a fair amount of debt. I think overall, one of the reasons that the stock jumped is that the CFO on earnings yesterday said that they expect earnings to actually be higher year over year. And that's because the overall revenue growth of the business is large enough to sustain significant CapEx spending if you also include the debt.
One of the things that was interesting to me about last night's call was just how much of a focus they put on the AI business uplifting the recommendations and the ads, the core ads business, which obviously is performing very well. And I think in previous calls where Mark Zuckerberg has really emphasized the personal super intelligence angle to Meta's ambitions, that was still there, but it felt like it was a little bit of reassurance in saying, it doesn't really actually matter. I mean, we're still going for it, but like the ads business is going to benefit one way or another.
Absolutely. Some of the some of the researchers of Meta have published research on the impacts of reinforcement learning on overall ad performance, and it's quite significant. I mean, you can see it, right? Like quarter over quarter, ARPU 10%, 15%, 18%, 16%. Those are pretty astounding numbers for a business at scale. And so I think it tells you that there's a lot of juice left to squeeze from the lemon on the ads business.
Hmm. One of the questions I wanted to ask you was Zuckerberg last night talked about, he really wants to have control over building the best in class models. And that's obviously why he's gone so hard at hiring talent and why they're hyping up this new family of Llama models whenever they do come out. Llama is an open source family of models. And so I wonder if you could just help us sort of square the fact that it's open source and yet he's saying, I mean, we want to really own this stack of the most competitive models. I mean, are these contradictory? Is it different? Help us walk us through it.
Right. Well, so there's open source and closed source models. Both of them exist, and then you have the data center business, right? So you can host a closed source model on Meta infrastructure, or you could host an open source Meta model also on Meta infrastructure. Both of those businesses are working really well today. The very largest inferences businesses, Anthropic and OpenAI, are predominantly closed source, but you have many neo clouds that are offering open source models. I don't know which direction Meta will go. The first 4 Llama models were open source, but there's no, or at least not, I haven't seen any direction to indicate whether or not Meta's new models will be open or closed.
But from what you're hearing, they're coming out pretty good so far from what we're hearing.
Yeah, I mean, I think it's a testament to the team. Also, many of the techniques are for the current generation are well known. You can look at the Chinese open source models, really hitting close to state-of-the-art benchmarks almost every week. And so as a result, I think Meta should be able to catch up relatively quickly. And then the question is, can they put themselves in a position to set the pace? And that I think can take more time.
Okay, so what about Microsoft? I mean, Azure growth was 39%. That was about the same as it was last quarter. The stock is down. What do you think investors are reacting to?
Well, yeah, the stock is down a lot, 10%. I think you're seeing 72% of software stocks this morning are trading down. And Microsoft is top 3 in terms of overall decrease. There's a difference in the way that Meta and Microsoft were perceived. Meta's core business is accelerating, is growing faster. Azure is still relatively constant. The one of the limiting factors there is just data center capacity, and Amy had mentioned it on the call. They're sold out until 2026. So they can continue to grow at this current rate. I think probably the major risk here is actually the OpenAI concentration, right? 45% of the backlog, the remaining performance obligations are tied into OpenAI. And there were 1 or 2 questions in that session yesterday talking about, can OpenAI actually generate the kinds of revenue needed to satisfy these RPOs? That's a big question that's on the stock. Right?
He pauses. Tomasz pauses.
Nobody knows the answer. I mean, we ran an analysis yesterday. Well, a chart of just like how fast OpenAI and Anthropic are growing in terms of billions of revenue. And you look at other businesses generating tens of billions of revenue, it's taken them 30 to 50 years to get there. And so whether that's Salesforce or Adobe or SAP, and these two businesses are doing it 15 years or less. So there's clearly a lot of momentum, and the numbers that we're talking about in terms of well over $1 trillion of OpenAI data center commits. I mean, we've never seen those kinds of numbers over 5 years of intended planning. And so I think that injects a little bit of uncertainty into the stock. And then you have a broader drawdown in the software market. The combination of the two led to the result today.
What about the Office 365 Copilot numbers that we got yesterday? So we got a little bit of color. I think it was 15 million paying users, I think, if I'm not mistaken. Whatever it is, I mean, it's, it's some proportion of the current Office 365 users have subscribed to Copilot. I mean, it's growing quickly. My question for you is if you think that growth can sustain.
Well, it's a cross-sold product. I don't think it's a product that people go out and buy. It's more of a product that is sold within an existing software suite like Power BI is. I do think Copilot as a brand, and I'll include GitHub in this category as well, had the early lead and is now starting to be outmoded, right? Look at what Claude is doing with Cowork, or with Chrome, or Google releasing the Chrome automated browser features, or the integration of AI within email. You're seeing a lot more innovation within the world of GitHub with the rise of Cursor. There hasn't been as much innovation, or the momentum hasn't continued out of Microsoft the way that it has everywhere else. And so I think it's reasonable to have concerns about an increasing churn rate, or at least a decreasing co-sell rate within the Copilots broadly.
Before you go, I do want to ask you about ServiceNow, which is, look, we had you on this time last quarter, and you and I were talking about how ServiceNow had posted very strong results, and still, I think the stock had fallen the day after earnings 1 quarter ago, and it seems to be kind of the same story today. I mean, ServiceNow stock is down for the year, over the past year, considerably. There is that broader drawdown in software stocks that you talked about. But I mean, if you look at the multiple for ServiceNow, a year ago it was trading sort of, in the top 5, top 10 SaaS multiples in terms of forward revenue. Now it's like much closer to the median, and the results have still stayed somewhat the same. What do you think?
It's pretty amazing. I mean, 8 consecutive quarters of beating expectations. It's McDermott yesterday talked about it being a rule of 55 company, right? It's 21% of revenue growth, 35% free cash flow margin. Like, it's really good. The fundamentals of the business are there. You have 3 major acquisitions. There's some acquisition integration risk with MoveWorks, Armis, and Veza. And so clearly there's some execution risk there, but they're being aggressive in terms of M&A to position themselves within the world of AI. There might be some pressure from some newer startups within the world of ITSM who are growing very quickly, but all of them are less than 10 million in ARR. And so I think it's very difficult to look at ServiceNow and say there's a meaningful startup competitor that's coming after them. You do have Atlassian that's pushing up against them from the mid-market. Jira Service Desk with 55,000 paid customer accounts. And so maybe there's a potential competitive threat there, but I don't think there's anything acute. And so it's a bit of a head scratcher, right? You're right. The PE ratio has fallen pretty significantly. And so I don't know why the stock is being punished, even though you look on almost every single metric, the company is doing very well.
We have the co-founder of Armis actually coming on the show in just a couple minutes towards the end of the show. I wonder what questions you might have for him, maybe not necessarily about ServiceNow, because I plan to ask him about that, but just about the business that he's in and how you see it going.
I mean, I think so. Within the world of security, within the world of ITSM, within the world of human resources, the basic workflow is ticket management. And I, as an employee, might ask, what is my 401k policy? I might ask, I can't get into my computer. Will you help me reset my password? And then the last one might be, I think I have a virus on my computer. And all of these workflows are tickets. People have problems that are then processed. They're starting to be processed via AI. And so conceptually, there's no difference in the technology. We're selling to different buyers. I would ask him, how quickly are all those workflows converging into a single system? And I have to believe he will probably say very quickly, and that's one of the reasons why ServiceNow bought Armis.
Great. Well, Tomasz, I want to thank you for coming on. As always, a pleasure. That is Tomasz Tunguz, a general partner at Theory Ventures here on TITV.